Okay, this next snippet, we're going to be going over accounting equation transactions and how each accounting situation impacts the accounting equation. So this one might be a little bit of a longer snippet, but we're going to go over several different kinds of transactions and make sure that we understand how this works. You're seeing on the shared screen the expanded accounting equation. Remember, the accounting equation is assets equals liabilities plus equity, but equity in the expanded equation can be broken out as owner's contribution minus owner withdrawals plus revenues minus expenses, okay? So every business has to start somewhere, and in Accounting 111, you're more than likely going to see a lot of starting from zero. So what happens when we start from zero? We are going to get an owner is going to contribute some kind of money, assets, or something else. Oops, I'm sorry. I'm drawing something that you guys won't get to learn until, oops, come on, give me that eraser. Chapter 2. So many apologies here. All right, so let's say our first transaction is going to be that the owner contributes, let's just say $15,000 cash to the company. All right, so we are going to analyze this. What is being impacted? Well, you have to know what assets are in order to know if it impacts assets. You're going to need to know what liabilities are to know if it impacts liabilities. And then owner contribution, you need to know what these are and how those work. So if you have any questions on that, please feel free to talk to your professor or myself. I'll be happy to help you with that. But when the owner contributes anything to the company, the value of that contribution will be put into the owner's contribution section, okay? So what we're going to see in this situation is the owner's contribution amount is going to increase by the amount of whatever was contributed, $15,000, all right? And then the asset that's being put in here is cash. So we're going to see assets in the value of cash going up, all right? So we're going to have cash assets go up 15,000 and owners contributions increase 15,000. So when we look at this, we want to always, after we analyze each transaction, we want to look at this and say, hey, is our accounting equation in balance? So if we take all of our assets, does it equal all of our liabilities plus our owner's contribution minus owner withdrawal plus revenues minus expenses? There's no owner withdrawal, revenues, or expenses or liabilities. So in this situation, does 15,000 equal 15,000? Yes, our accounting equation is in balance in this one. Let's now look at what happens when an owner contributes something other than just cash, all right? Let's say that in addition to this $15,000 cash, the owner also contributes a $20,000 vehicle. Guys, I was not an English major. I misspell a lot. Usually I catch it though. $20,000 vehicle, and let's say a $10,000 piece of equipment. All right. So what happens in this circumstance? Again, the owner's contribution will be whatever the value is of all contributed assets. So we're going to take this 20,000 plus 10,000 plus 15,000. So that's going to equal $45,000 on this side. But what we want to do on the asset side is we want to know each individual type of asset that we have. So we're going to have $15,000 cash is going to be increased. And I'm just going to go ahead and hit enter here. We're also going to see a $20,000 increase in vehicle account. I guess I need to go a little bit bigger, probably even bigger than that for equipment. And then we're going to increase $10,000 for equipment. Okay. So we can see that each one of these asset values, 15,000 plus 20,000 plus 10,000 is $45,000. So all of this equals our owner contribution amount. All right. That's how this works. Whatever the owner contributes is what's going to be annotated there. But now let me throw one more situation on this. Okay. What if the owner contributed also some land, but the land had a mortgage or some money owed on it still? Well, if I'm the owner and I give the land to the company or contribute to the company, I don't want to personally keep paying for the land if I don't own it anymore. Technically, the business does. So I'm also going to contribute not only just the land, but also the liability associated with it. So the land value of, let's say it was 50,000, with a note payable on the land for 30,000. Okay, we're just going to add this in. Now, because the owner doesn't technically own that 30,000, that is a liability. A bank, a lender, somebody else has claim on that land asset that we just contributed. So we can't put that part into our owner's contribution, but we can put the value of what isn't owed of that land into our owner's contribution. So using the same amount of information here, we're going to now increase our assets with land for, oops, I put 30,000, I meant 50,000, okay? $50,000 for land. But what we're going to do, and just for simplicity or for clarification, I'm going to do this. Move some of this over just to make it so it's a little bit there. Okay. So we have all these assets. We have this owner's contribution, but now what we're going to do is we're going to increase this by the 20,000 that the land is been paid off. We paid off $20,000 of this land. We still owe 30,000. That's what the note payable is. We owe 30,000 on that land. So we're going to increase this to 65,000. We added 20,000 to that. And then we're going to put under the liability account's going to increase in notes payable by $30,000. All right. So now we're going to go ahead and add this up. We have 50, 60, 70, 80. We have $95,000 of total assets. Now let's see if our liabilities plus our equity count equals 95. Well, if we take 30,000 plus 65,000, we see that indeed both sides equals 95,000. That's what we're looking at when we're trying to stay in balance with the accounting equation. And these three scenarios are pretty much going to be what you would see when an owner contributes something to a company. And I will go into other snippets since this one was kind of long so that I can go into other different transactions in other snippets.